Standard economic theory would say, well, we take all the information that we have into account before we arrive at decisions. But in practice, what people do is they take shortcuts. So you tend to rely mostly on information that you have based on your most recent experience. And when you have 3, 4, 5 years in which the banker is doing really well, very few defaults, lots of good loan growth, people then begin to ask, well, is this just a string of good luck? Or is the banker so smart that he's able to manage risks more effectively? And after a while, all of us fall into that trap. So we think, as bankers, we think we're smart. As regulators, we think bankers have all the skills to manage complex risks. Investors begin to think that bankers are able to manage increasingly complex risks more effectively. And so everybody becomes incredibly bullish about banking in general. And then you get a lot of risk taking. Then you get a crisis. I think understanding the psychological bias that drives this kind of behavior is really important. Because one of the implications of the paper is that the longer things have gone well, the more we should expect trouble, which seems sort of counterintuitive and almost paradoxical, but it's true. And so one of the policy implications that I put forth in the paper is that capital requirements have to be very strongly countercyclical. And what I mean by that is that during good times, banks should be required to increasingly hold more and more capital. Because in essence, the more capital banks have, the more circumspect they'll be in terms of how much risk they take. So during good times, requiring banks to keep more and more capital is going to start putting the brakes on the rate at which bank lending grows. Even with the existing capital requirements that are being contemplated under Basel III, we should be going a lot higher. So for example, the so-called leverage ratio, which is a measure of how much capital the bank has, under Basel III has been set at 3%, but in the US, regulators have set it at 5%. Now, I think 5% is actually too low. That if you take into account the kinds of things that I talk about in my paper, we should be talking about 10, 15%. So twice that or 3 times that.